you wanted the best, you've got the best podcast. The hottest podcast in the world. The Chris Voss Show, the preeminent podcast with guests so smart you may experience serious brain bleed. The CEOs, authors, thought leaders, visionaries, and motivators. Get ready. Strap yourself in. Keep your hands, arms, and legs inside the vehicle at all times, because you're about to go on a monster education roller coaster with your brain. Now, here's your host, Chris Voss.
Hey folks, it's Voss here from theChrisVossShow.com. Ladies and gentlemen, there are things that makes official. Welcome to 16 years, 24 episodes of the Chris Voss Show, bringing you all the latest knowledge and information and things that you need to help your life. But we need you to share it with your family, friends, and relatives. Go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss, Chris Voss 1 on the TikTokity, and all those crazy places on the interwebs. The opinions expressed by guests on the podcast are solely their own and do not necessarily reflect the opinions of the host or the Chris Voss Show. Some guests of the show may buy advertising on the podcast, but it is not an endorsement or review of any kind. Today we have an amazing young man on the show. We're going to be talking today about insurance, business, personal, all those things that you need to protect yourself from the bad guys. I don't know, as it were. I don't know if that's really the bad guys, but, you know, the lawyers and lawsuits and all that sort of good stuff, and how to get the best bang for your buck. Frederick Fisher joins us on the show. He's a seasoned expert in professional liability with career spanning over 50 years, including 20 as a claims adjuster and owner of a TPA. He's renowned for his dedication to client financial security, and he advocates for providing clients with strong financial safeguards, letting competitors focus on selling more insurance. He was on the show, I think, last year. He is the author of the books Let me read that. Claims Made Insurance, the policy that changed the industry, a deep dive review and history, out June 18th, 2024. Welcome to the show, Frederick. How are you?
I'm fine, Chris. Hi. It's good to see you again. Thanks
Good
for
to see you again,
wanting
too.
to scare your audience away by having me back.
No, I'm usually the one who scares the audience away. They're like, this guy again? He's been here for 16 years. Can't they put an AI in there for him? Anyway, Frederick, give us your .coms. Where do you want people to find you on the interwebs?
It's Fisher, Fisher, C as in Charlie, G as in George.com. FisherCG.com.
Give us a 30,000 overview of what's going on today. I guess there's some different news stories or different litigations that are going out there in the world of insurance.
Well, this is mind-blowing, but I guess, I don't get it, but I suppose it's a sign of the times that, fastest way to clear a room is to say you want to talk about insurance. Nobody wants to, everybody hates it. Everybody hates buying it. Everybody hates dealing with it. They just give me what I need and leave me alone. Here's your check, and boy, can that lead to problems. But the big news of it today was the fact, and here's the headline, it's in the Hollywood Reporter today, and or actually the 21st, so yesterday. It ends with us. Insurer files lawsuit saying it doesn't have to pay Justin Baldoni's legal fees. He apparently is involved in some litigation involving some very deep pockets, involving Paylocity and a fellow named Baldoni, I guess, and Blake Lively.
Blake Lively. I think we know him from isn't he on The Voice?
It could be. And in any event, he has no coverage. No insurance coverage. This is really... there's allegations of sexual harassment and all sorts of stuff, and I'm quoting from the article, allegations of sexual harassment on the set of It Ends With Us. And the insurer for the film has filed a lawsuit in New York seeking a court order, has no duty to pay legal fees for the production company or its officers because the alleged misconduct occurred before the effective date of the policy, and that it wasn't informed of Blake Lively's complaints, a precursor to the litigation during the filming of the movie. And really what that boils down to was apparently somebody knew inside this company that Blake Lively had made allegations of some kind that would have triggered the policy at that point in time, and that the insured knew about it. And when they renewed, they didn't disclose. Or when they bought the policy from the company, they didn't disclose any of it. So it was like a building that's already on fire. No insurance company wants to insure a building that's already on fire. That's it. That's been one of these precepts.
Never a good idea.
Forever, right?
Yeah.
And so now they're going to be out. They're going to be without coverage if the New York courts sustain the position being taken by the insurance company.
Wow.
And if it's accurate, chances are it will. And why that's important is for several reasons. Number one, it's probably the media liability policy they're talking about is probably written on what's called a claims-made basis. And one of the big problems with claims-made policies, of course, this is covered in my book, is what did the insured or policyholder or applicant know, and when did he know it? Because when you're dealing with claims-made policies, that becomes critically important. Are you aware of something that is going to give rise to a claim against you once that policy incepts? And if you know that, you got to answer yes on that question. And if you don't, that's fraud and misrepresentation.
Yeah.
So even if the claim does come in during the policy term, hey, you knew about this and you weren't candid on your application. I mean, that's one of the defenses that could be involved in this matter. And as a result, that's what's happening here. And so this is, and it's a high-profile case on top of it. And they're not the only ones. I mean, Harvard has had similar problems. USC has had similar problems. And they just kind of take this for granted.
Yeah.
You can't do that with claims-made policies.
So what's the lesson here? We need to make sure we're fully insured or in many ways?
Well, it's a combination of factors. Number one, deal with a knowledgeable broker. Don't use your brother-in-law. Don't lose your farmer's agent just because he does a good job for you at home. And everybody thinks insurance is just insurance, and you fill out an app and you get a quote and you buy it and you pay, and that's the end of the story. But unfortunately, too many people come along with that attitude. And when you're dealing with claims-made policies, as good as they are and how they solve problems for the industry, they are dangerous. And you got to be really honest. And that's not and like I said, the Hollywood Reporter reported on it, and the Insurance Journal picked up on it today. And their headline is prior knowledge ends filmmaker Baldoni's coverage for harassment claims.
Wow.
And so if it's true, they're toast.
Wow. You have to have
they're not going to have any coverage.
You have to have insurance now for sexual harassment. Wow.
Exactly. And think about that, Chris. You're in the same business. You're in the same business. So if anybody's ever said to you, Christ almighty, what are you doing? I am not happy with this. I'm going to sue you today. I'm going to go talk to my lawyer. Now you know something's brewing. It may never come to pass, mind you. I might not do that. But now you know a threat has been made. And so tomorrow you get your renewal application because hopefully you already have media liability insurance for your show. And you answer no on the warranty question. I'm not aware of anything.
Yeah.
So then if I follow through in a month or two, you're going to be in the same position as these folks.
Wow.
And that's why this stuff is so important. You have to be honest. You have to disclose what you know on an application for insurance, even when especially when they ask a specific question. Are you aware of anything that could happen? And if you say no, it's going to come back to haunt you big time. And I mean big time. And they're not the only one. There's another area, or I should say group of policyholders, because there are a lot of different types of policies that are written on what's called a claims-made basis. First of all, if you provide a service to others for a fee, that's going to be probably written on a claims-made basis. Doesn't matter what that service is. It could be an attorney. It could be an architect and engineer. It could be you're providing a service right now to entertain people. And then you've got maybe companies and businesses that don't provide any services to others, but they buy director and officer liability insurance. They buy employment practice insurance to cover them from harassment and sexual molestation and wrongful termination. Wow. They buy fiduciary liability insurance to cover them in the event something goes wrong with some of their employee benefit programs. It's called fiduciary liability.
Wow.
Those three policies are all corporate suite coverages are written on a claims-made basis. So even companies that don't provide a service in the classic sense, maybe they're a manufacturing company. They buy D&O, they buy EPLI, they buy, fiduciary liability coverage, and all of those policies are written on a claims-made basis.
Wow.
So you can imagine the millions of policies that are being sold out there, not just to professionals like attorneys and accountants and, doctors and service providers of all kinds and consultants like all kinds. You're also talking corporate America. And it doesn't matter whether it's a corporation or an LLC or a partnership. They all buy what's called management liability coverage. That's always written on a claims-made basis.
Oh, wow.
So millions of policies are sold on this basis. So when you sign an application, I don't know of anything going wrong.
Do people do that a lot where they try and chase the fire, the buildings are on fire?
Guess who the worst is?
Who?
You're gonna want to take a guess?
As long as it's not me, I'm good.
Talk about a category of policyholder, like architects and engineers and insurance brokers or real estate brokers.
I wouldn't have a clue.
Lawyers.
Lawyers? What?
Yep. I'm serious. I did as a precursor to the book in 2023. I did this big article that was published by the International Risk Management Institute. Talk about a mouthful of air, huh?
Yeah.
But I did a big article for them. And I looked at 224 claim denials for this very reason. Failure to disclose, failure to report timely, and so forth. And of the 224 appellate decisions throughout the United States, almost every one of which I agreed with that, by the way. Lawyers were 28%. The second largest category after lawyers were directors and officers. Why? As a director and officer, what's the first thing you do when you're served with a lawsuit, alleging, that you committed business management malpractice, which is in essence what it is. What do? You send it to your lawyer.
Yeah.
And that lawyer, depending on the state, may not have to say, oh, by the way, do you have D&O insurance? He doesn't ask that. He just looks at the complaint, does whatever he's going to do. And then maybe eventually he'll say, we should report this to the insurance company if you have one. And probably by then it's too late already.
Yeah.
And so between lawyers at 24% or 25%, I think it was, and directors and officers, the total of those two classes alone came to 48% of all those cases.
Oh, wow. So lawyers are pretty, I don't want to get sued. They're pretty, they're up there.
Less than sophisticated as they shouldn't be, shall we say. Oof. But I mean, that is troubling. And there's a major trouble, very troubled by that. And then when you figure, most of the time these were litigators as well. So they obviously know something about insurance because they're suing people hoping they have coverage, of some kind. So they are sensitive to the what insurance is all about. We're not talking about, appellate lawyers necessarily, guys in the back room.
I imagine they know they can fight you, because they don't have to pay attorneys or whatever to fight you because they are attorneys or something.
But this is a real and engaging problem.
Yeah.
And most people just take all this stuff for granted. They don't even want to spend the time with their insurance producer. And, as a result, they end up not being properly covered, whether it's not taking the time to really evaluate how much is my property worth right now. I even, knowledgeable as I am, I couldn't tell you whether I'm adequately insured for my house because I don't know what the price per square foot is right now in Southern California to rebuild a home with just ordinary construction. I mean, and we're not talking about, bigger, 2x4s and 4x8s instead, or, mahogany wall coverings and granite floors, that sort of thing you'd see in the palaces that we've got around here. We're talking ordinary construction. I don't know what the cost of that is right now because there's so much supply chain pressure. We got 18,000 houses to rebuild.
Yeah. Yeah.
So I don't know if I'm adequately insured.
Yeah. I mean, that was probably...
Good luck trying to talk to your underwriter about it.
Yeah. I think I remember that discussion that we had last year. The, that California fire, a lot of those people were underinsured and like State Farm had pulled out, I think 9 months or something before. And there was, some of the people that couldn't afford the extra insurance that really covered the true value of the house.
I'm getting garbled with you, but we're having a little bad connection here.
Oh, are we? And so some of the things that had gone on with that dealio, with this the fire in California, they had been underinsured because a lot of those homes had soared in prices, and those people lived there for 50, 70 years, and many of them couldn't afford the higher insurance, so they were underinsured and probably will never see the true value of their house that they lost in the fire. Yeah. It's quite interesting.
Some people sometimes it might be a question of affordability. I don't deny that. And other times it's, the people don't want to spend money on insurance.
Yeah.
And they literally think this will never happen to me. So, I'll scrimp a little. Let's not worry about it this year.
Let's
worry about it next year.
Yeah. We lived here for 50, 70 years. I mean,
I don't like to paint a broad brush. Because I think out of 18,000 homes, I bet you there's 18,000 different stories.
Yeah.
And then, of course, you got the problem with some insurance companies won't allow you to set the value. They'll go to an estimating software and they'll plug in the location, and they'll and the system is tied into county records, and the system will come back and said this house can be rebuilt for $387,000.
Wow.
So and that may or may not be correct. The information they pulled may or may not be up to date. And on top of it, it may be set to be programmed to give the lowest value possible, when in fact it should be higher.
Yeah. And
there's various options that can be done. So the estimators themselves can be somewhat manipulated by the user, the end user, and so you get these wide variances.
Yeah.
I do expert witness work right now.
Oh, really?
I've been doing for some years, and I got a case right now where we got two different estimates from the same estimating software. Okay, that are $38,000 apart. And I'm not going to do the side-by-side comparison to see where the differences lie. I know that somebody else was hired to do that, and I don't know what the results of that were, but I'm not going to do it at my rate. But how do you explain that?
Yeah. So I think there was another story you wanted to highlight, the crumble story, the cookie.
Yeah. See, there's another.
Oh, the cookie crumbles.
Not well, because this too deals with media liability insurance, media, what they call media errors and omissions, and apparently Crumble was out there stepping on toes like crazy of copyrights with the background music or what they were doing
with their advertising.
And this is a cookie company. This is a cookie chain.
Yeah.
But they're accused of facing allegations of direct copyright infringement for using 159 copyrighted songs in their promotional videos and advertising without securing proper licenses.
Their social media manager must have got out of hand on that one. That's got to be what that is.
I don't know. Maybe the CEO. You know how these CEOs, some of these CEOs today are 20 years old and they're just thumb typing. So they don't think about regulatory stuff, number one. They don't think about insurance, number two. They think that data should be free, number three. And now we'll just use the music, no problem. They're getting free advertising. It doesn't work that way. Oh my God. So I'm just throwing options out here. I really don't know what happened.
Yeah.
But I do know they got a big problem. And, they've got a real potential for copyright liability exposure going on here. And, of course, Warner's is not somebody to mess around with.
Yeah, those guys want their money. I mean, they were little old ladies during the
they do.
time.
And it's possible, I don't know whether they had media liability insurance but didn't have copyright protection, which is astounding to me, or they never even thought about buying it.
Yeah, they probably, and obviously they never thought about, copyright law and rights and music.
Exactly. Exactly. So that's a big deal. And, so here's the message to all the entrepreneurs out there. Take buying insurance seriously. and don't use your brother-in-law as your broker unless he's a specialist in it.
Yeah. And then that should lead us into what you do. Tell us how you do and how you stand out as a specialist in this field.
I spent 20 years. I've been in this industry for over 50 years. So I'm a glutton for punishment, obviously, or the world's biggest masochist. I'm not sure which, but I happen to love insurance, so that immediately puts me on the edge of possibly being insane. Maybe the point is, for the first 20 years, I handled claims for insurance companies. We were an independent firm, and we also had claim settlement authority, and we could hire the lawyers if we needed to, subject to a approved list. But so that's called third-party administration services. And I, did that for 20 years. But we was all professional liability and what's called specialty lines insurance. And we got involved in some wild claims. I mean, just crazy, complicated, and what have you. So, we all had legal backgrounds. So that helped an awful lot. But one of the things I learned how to do was read an insurance policy, which is, horrifying to probably your listeners who want to read thousands of policies all day long. Well, they were paying me to do it, so what the heck?
Sure, yeah.
But I found out where, and this is now a trademark phrase, we've filed for trademark. I learned really quickly where the gotchas that'll get you.
Gotchas that'll get you.
Yeah, the gotchas that'll get you. That's exactly what I learned from reading all these different policies over the years, thousands of them.
Yeah.
And they're all different. They all have something different about them. There's no two alike. There's no standardization. And so I, learned all of that. And and then in the 1990s, I decided to get out of claims for a lot of reasons. And I opened up what's called a wholesale brokerage. And we also had underwriting and binding authority. So we were also acting as a managing underwriter on certain lines of business for certain carriers. And it took off. But one of the things that we did is we held ourselves out as experts. We advertised our expertise. And eventually my tagline on our emails became, we provide financial security. We let our competitors sell you some insurance. And that was the difference. Yeah. I don't think there was one policy form we sold for an insurance company, and we represented over 100. I don't think there was one insurance policy that we sold that I didn't personally review. Now, granted, you only have to do that once until they update the form, and they don't do that every year. Maybe 2, 3, maybe sometimes longer than that. I've seen 1990 forms still in use. So you only have to do it once. And I would highlight it, it'd be in green, yellow, and red. And if I marked something in red, all right, so now I'm on the phone to the underwriter saying I need some language changes. I need some correcting endorsements, and here's why. And I either got them or I didn't. Or maybe I got some of them and didn't get others. But whenever they said no, and we did this openly, I was very honest about it. I told my underwriter, we're going to have to make a disclosure here. I'm going to have to let our prospective policyholders and our customers who are retail brokers, because we were wholesale, we're going to have to let them know about my concerns of this policy. And they acted like, okay, go ahead. But at least our policyholders bought something that was, for whatever reason, I didn't like, but at least they were told. And so they were making an informed consent decision. And I've often said, I don't mind selling you garbage. I have. But only if I've told you why and I've offered something better.
Some people like choices and they're going to go on the cheap, right? Sometimes.
Well, unfortunately, most people do buy on price. And and given the wage pressures we all face today, most of us aren't CEOs where we're making millions of dollars and our and some of our employees have to work 2 jobs just to be able to afford a rent. It's a different world today than Just remember, in the 1950s and 60s, when moms were home and taking care of the kids when they came home from school, and there'd be baked cookies and milk waiting for you. Just remember, daddy was paid enough so you could have one person working.
What a concept.
Yeah. And now you got both parents working full time. Sometimes one of them or both of them may be having two jobs, and they can barely afford their rent and food.
Mm-hmm.
Then they wonder why they're in debt on their credit cards. I mean, it's the income disparity is terrible.
Yeah.
But the bottom line is insurance is the last thing. It's either milk or insurance. Come on. We know where that's going.
Yeah. And there were a lot of people in that fire that didn't, the big fire in California, that they had to forego insurance because they couldn't either afford it. Some of the people were old folks on
fixed incomes. Yeah.
Fixed incomes. And, yeah, it's crazy. So, what do you recommend consumers do? Let's start with residential, your everyday consumer. What are some of the insurance policies you should have and concerns they have about their insurance policy? Well,
let's talk about that.
Sure.
They're either renting or they have a condo or they have a home. Are the three general categories. And this is being overly broad now. If you're a renter, there's not a lot of things you can do. Although technically speaking now in California and some other states, you do have an insurable interest in the property. Now, landlords are taking advantage of that, though, because normally you'd expect the owner of the property, if he's renting out a home or a condo, whatever, normally you find that the owner would be buying the insurance.
Mm-hmm.
But not necessarily. They can put it in their lease that you're required to insure the property that you don't own.
Mm-hmm.
See, but you do have an insurable interest because you're a tenant. So it differs from state to state whether you could do that. And so that's number one. Are they going to require you buy the insurance? Number two, if you have a condo, you're really insuring the air and your personal property. Because the walls don't belong to you. The ceiling doesn't belong to you.
Yeah.
So that becomes another problem. But there's special forms for this.
Mm-hmm.
You got to spend some time here, folks. You just do if you want to be properly covered.
Yeah.
I'll give you a good example of one. Somebody's living in this very nice condo development, and I think it's a high rise. And there was a terrible plumbing leak in the condo upstairs.
Mm-hmm.
And it was so much water, it literally came through the ceiling.
Oh, wow.
So fortunately, this person had some good coverage for his own condo. And at the end of the day, after getting additional living expense so they could move out during the reconstruction and repair work and live in another comparable place, at the end of the day, the whole thing cost about $450,000.
Wow. So how do you know if you're properly insured, if you're fully covered and you can get your money back, whether it's a homeowner's insurance and all that stuff?
Well, number one, there's two sides of this. The insurance industry, the insurance companies would say, read your policy as if you're going to understand it all.
Yeah.
How likely is that, right?
Yeah.
But read your policy. Okay, I've read my policy. I can't figure it out. I don't know what the hell they're talking about. And of course, just remember, every word that's bold-faced is defined somewhere. Now, you got to find the definition section. And some of these policies are pretty complicated.
Yeah.
Where the definitions may be. So good luck with that. Unless you're using or scan, put it into Acrobat, maybe the Acrobat can find it. The point is, you're supposed to read your policy. Okay, so let's assume you do. You're going to understand it?
No.
You're going to know what's enforceable in California, what's not enforceable here, or maybe you got out-of-state property, and so it's a little different in Colorado than it is California. You're going to know that? Really?
No.
What you really need to do, and I can't urge this strong enough. Number one, never buy on price.
Mm-hmm.
Never. It's propaganda, guys. Every day we're bombarded with, ads. Oh, I just saved $400 in my auto insurance. I just saved, $600 in my homeowner's insurance, blah, blah, blah. What are you giving up? That's the real question.
Mm-hmm.
Because everybody thinks its policies are the same. They're not.
Mm-hmm.
That's number one. State laws only require certain minimums. After that, whatever you want to do is fine. Just let us file the forms with us, and we'll read them and approve them or whatever. The same with the premium rates. So no two policies are alike. Every policy deals with certain things differently. And how do you know that? I mean, how would you do that, so to speak, on your own? Now, California is one of 37 states that follow a standard of care for insurance brokers, insurance producers, your agent, your broker, whatever. It basically says they're an order taker. They're to diligently get the coverage you request, and they have a duty to advise you if they can't. Or at renewal, maybe you change carriers, and the new company has something that's different and not in your favor. They have a duty to disclose that. Okay. Now, it's easier to say who isn't in one of those 37 states, because on the other side, the flip side of that, there's only 13 that don't follow this rule. And those 13 states that don't follow the order taker standard are Arizona, Connecticut, Florida, Georgia, Hawaii, Idaho, Michigan, Montana, New Jersey, Pennsylvania, Virginia, Washington, D.C., and, West Virginia. Those are the states that do require agents to have a higher standard of care than the order taker standard. The order taker standard really just boils down to this. They have no more obligation to help you or advise you or tell you what to do or what you need than your server at your favorite restaurant. That's why they call it the order taker standard of care.
The order taker standard of care. That's really interesting. I've never heard that term. Yeah.
Now, you can be held to a higher standard of care under certain conditions. Number one, you hold yourself out as an expert. Well, take a look at some of these websites today that insurance producers, put out there. They talk about customizing your coverage and we're going to learn about you, whatever. They never say they're experts. They don't say they're specialists. For this very reason, they can be held to a higher standard of care. Number two, they cannot misrepresent coverage. So if you ask them a question about something and they say, "Oh yeah, that's fact," and you have nothing to worry about, whatever. This is how it works. It better be accurate. And of course, number three, so they can't misrepresent coverage. And they held themselves out like experts. And another exception is going to be where you pay them an extra amount of money in addition to whatever commission they get from the insurance company they're placing you with. They agree to do a risk management review for a fee. That means that they're going to interview you, they're going to look at everything, and they're going to make really good recommendations, hopefully. And that will also hold them to a higher standard of care. But those are the general exceptions to the order taker standard. There's one more. California has not yet adopted it. And that is the length of the relationship. That after, say, 10 years, they've got such an intimate knowledge of your needs and who you are and what you have and what needs to be covered, that in and of itself could create a higher standard of care. But California has not yet adopted that. It's something that some states back east have done and adopted. The only state west of the Rockies that I'm aware of that has adopted it is the state of Washington. They did that, I think, about 2-3 years ago. And it was by an appellate decision. It was not statutory. So those are things you need to know. I rely on my agent. Well, that's nice. I ain't going anywhere. Well, he's supposed to get me the best coverage. That's what I always tell him every year. That's too general. You can't say, I want the best coverage. Because number one, what does that mean? What's best? The quality of the coverage? The price of the coverage? What? So it's way too general. So what you really have to do to get around it is, number one, you got to be willing to spend time with your agent. I want to know what the options are. I want to know what's really covered here. And when we go back to homeowners, okay, fine, let's deal with that. Or condo coverage, let's deal with that. Structural coverage, fine. If there's an attached garage, automatically covered. If there's an additional building on your site, like a detached garage or something, that may automatically be covered up to a certain limit, or it may not be. Like that one. How about the nature of the construction? Because, when these agents and brokers sign on to one of these websites to get an estimate of what the cost of rebuilding is going to be, don't be fooled. One of the software programs is called one of the options is custom coverage. Well, that makes it sound like that's got to be for a higher end home. It's the exact opposite. The custom coverage is standard on that for that software. So now you need something that's going to do premium or whatever. But you got to be really honest about what do you have? Do you have granite? Counters? Do you have marble floors? Do you have mahogany or any special woods? Do you have brickwork inside the house around the fireplace or what have you? Those are all much more expensive type of features. Your agent needs to know that. And sit down with them. Number one, you got to worry about the dwelling limit. And then the big one. My house is 70 years old. If I had a total loss fire, what percentage of the rebuild cost is an improvement because the building codes and the ordinances have changed?
Oh, wow. There's all sorts of ways they can get out of paying you these days, isn't there?
Yeah. I mean, improvements aren't going to be covered generally. For instance, if I've got Corian counters in my kitchen, my insurance isn't going to pay for me to upgrade them to granite.
Oh, wow.
Okay. It's going to pay for Corian. But if they have to spend more money even with Corian because the base of the counters has to have more reinforcement for earthquake purposes, that's a code improvement. And code improvements is a separate coverage.
Oh, wow. That's
and it's
crazy.
buried in the policy, babe. It's not on the declaration page. What it's going to be is a percentage. Usually, most insurance companies do it initially. Their default will be maybe 10% or 15% of the fire limit. So if you think you're going to insure your property for fire and what have you, that kind of hazard, and you say, okay, it's worth $500,000. We put a fire limit of $500,000. That means you got $50,000 for code and ordinance upgrade.
Wow.
And depending on where you live, that may not be anywhere near enough.
Yeah.
Because some of the, you should see what they did after the Woolsey fire in Malibu. Boy, the building codes really got stringent in Malibu after that. And you could have tremendous $20,000, $30,000, $40,000 in additional building code upgrades that, you may not be covered for.
Oh, wow. Oh, I gotta tell you, man, there's always some new thing and something you got to keep up on.
Yeah. And extra living expense. You're not gonna live in the burned down house. You're gonna put a pump tent on the foundation. So where are you gonna live? So don't take extra living expense for granted.
Yeah, and you gotta make sure you're covered.
And again, to me, I favor what's called actual loss sustained. No time limit, no limit. Getting that is not going to be easy in California right now, I'll tell you that. Or Florida, or any of the other states getting hit with hurricanes or tornadoes or hail. Try getting extra living expense, in Texas right now. Oh, yeah.
I mean, you bring up a good point. One of the challenges is some of these states. I know Florida has got, the condo owners are getting hit with all these extra fees. I was just reading an article today that a lot of them are starting just to abandon their multi-million-dollar properties, their condos, because they just can't afford the fee they've been hit with from the law.
And the number of insurance companies there that are actually paying claims is a real problem right now, because a lot of these insurance companies are, shall we say, playing hardball on every estimate. Hardball. And there's a major scandal going on. I'm not taking a position on it. I've seen both sides. But supposedly there were a lot of claim adjusters who were saying my reports were altered without my knowledge. Now, I don't know if that's true or not. I know that this is an ongoing controversy in Florida.
But controversies in Florida? No way.
Yeah, really. Well, it's not just Florida. Not just Florida. But more and more, insurance companies are getting adversarial. Wow. They have forgotten their mission.
Seems like they're being allowed to get away with it too.
Their mission was basically to put people back in the position they were in the first place before the loss, and hopefully their actuaries have got accurate data so they could price it correctly. But they're not doing that anymore. The MBAs have moved in, hedge funds are moving in, private equity companies are moving in. They just want profit, baby. Give me that profit. Give me that profit.
It's all about profit.
And how do you increase profit? You cut expense. So they see claim payments as an expense, not an obligation.
That is a wild world. That is a wild world we live in. So let me ask you this: if you're an entrepreneur, business, what sort of insurance things do you need to have, or policies should you look into?
First of all, ignoring for the fact, what are they doing as entrepreneurs? We'll get to that last. There are certain universal things that you have to have. Number one, irrespective of what corporate or business, it's not even corporate, irrespective of what business entity model you choose, whether it's starting out as a proprietorship and then I'll form my LLC or my corporation later, fine, or partnership. And then there's many different types of partnerships, pure partnerships, limited partnerships, professional partnerships, what have you. Any business entity needs to have management liability insurance, also known as D&O, director and officer liability. But not every business entity has directors and officers, like partnerships don't.
Yeah.
LLCs, they don't have directors, but they do have corporate officers. Instead of directors, they have what are called members of the board of managers. To make it easy on the definition of insured, to incorporate all these different business models, a lot of policies that cover the corporate managers, or the senior executives, so to speak, are now calling it management liability for that reason. Now, they don't have to have a separate policy for partnerships and a separate policy for LLCs, that sort of thing. They just have one big definition section that picks up all of that, all those different structures. So you do need director and officer liability coverage or management liability. And don't make the mistake of thinking, oh, that's just for publicly traded companies. Well, that's not true. That's the thinking, but it's not true. The executives, any business entity, how you want to call it, can be personally liable for the damages experienced by a third party because of the business decisions they make.
Yeah.
For instance, I'm making a new widget, and my designers come to me and says, we got a flaw here that could hurt people. How much is it? Are you telling me we got to shut down production? For how long? What's it going to take to upgrade? What's it going to cost to recall all the ones we sold? What's the probability of this happening? We've been out in the field for 2 years with this product. No one's gotten hurt. I'm not spending that kind of money right now. No.
Yep. It's usually up.
Right then and there, you just opened yourself up.
That's usually how it begins and how it goes.
Yeah. So that's one example of it. So yes, you can be liable. It doesn't have to be a shareholder or derivative suit, and that's what everybody's exposed to in the news. Big class action suit filed against so and so. But Boeing's another example. They killed 300 people.
Yeah. It's kind of interesting how that all works.
Oh, yeah.
So, as we round out the show, give us your final thoughts, round out and pitch out for people. How can they get to know you better, and what are some of the things they need to think about?
Take insurance seriously. Never buy on price. Get a good broker or a good insurance producer. Hopefully not your brother-in-law, unless he's willing to tell you he's an expert. Get a good producer who's willing to sit down with you and take the time to explain to you what you need to know. And if they won't do it, find somebody who will. Because at the end of the day, you don't want to be holding the bag on a loss that you can't cover yourself. And we've had some good examples of it today. Some major companies are without coverage in multi-million-dollar lawsuits, whether it's Crumble or or what the Hollywood Reporter was talking about today. Those are going to be millions of dollars going out the window. And we see it every day. I mean, I'm still reeling. I don't know if I brought this up in the show or not, about the Pharmacia decision. They're out of pocket $47 million for that very reason.
Wow.
$47 million.
That's will they take a check for that?
I can tell you they had to write one.
Yeah, that's true. Definitely.
But I'm still reeling over that case. That's just bizarre. And I also winded up by basically saying, look, folks, It's intentional. I'm telling you right now, whether you believed it 20, 30, 40 years ago that insurance companies are out to screw you, I can tell you right now, if it wasn't true then, it's certainly true now.
Mm-hmm.
Because lawyers are openly writing articles, and I've got them in my library. Lawyers are writing articles about how we can help insurance companies, issue policies that they won't have to cover a lot of losses.
Wow, that's crazy.
They're openly doing it.
That's crazy. So, what areas do you cover as an insurance? What states are you? Can you do the nation, or how does it work?
Well, when I owned my brokerage, we were in 40 states. We had 9 non-resident licenses and up to almost 40 states, including our resident licenses in California. I've since retired from production, so I don't actively place coverage now. I do consulting and risk management consulting, but mostly I do expert witness work.
Mm-hmm.
I testify as an expert witness in cases involving insurance agents, producers, or bad faith cases involving insurance companies, and anything else where I believe I have the experience and the knowledge where I can be of assistance. I'm very honest about what I feel is in my wheelhouse and what I feel is not. And even in the insurance industry, I turned down a case today, or maybe it was yesterday, that I felt was a little bit beyond my wheelhouse, and I wasn't comfortable with it. And, at my age, I should be retired. I could be fully retired if I wanted to be, but I need a reason to get up in the morning. So
there you go.
Are people, and there are people out there that think I have something valuable to say. As a matter of fact, I'll be in trial tomorrow morning.
Oh wow, you gotta love courtroom. So give us your .coms. Give us your .coms as we go out.
It's again Fisher, Fisher, C as in Charlie, G as in George, FisherCG.com. I've got a lot of articles there you can read.
Mm-hmm.
And there's links to my book. If you are providing a professional service to anybody, you got to buy my book. Read about how I deal with claims-made policies. It's written for the consumer. It's not written for industry people. It's really easy to read. And if you go to Amazon, you'll see there are 17 5-star reviews.
Mm-hmm. Check it out. Claims Made Insurance, the policy that changed the industry, a deep dive review in history. You got to advocate for yourself, people. That's really important. Thank you very much for coming on the show, Frederick. We really appreciate it.
Thank you for having me back. You must be a masochist.
Well, I'm B. That's possible. So thanks for tuning in. Go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss, Chris Voss 1, the TikTokity, and all those crazy places on the internet. Be good to each other. Stay safe. We'll see you guys next time. And that's